How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for December 24th, 2018. Yes, finally the CFTC has released some data, but they've only provided us the data that was recorded on December 24th. But that's okay, because this data that was recorded December 24th was extremely important, because if you remember on the last video that I posted, contracts were expiring. And when contracts expire, we don't know for sure if the data that is presented to us is the exact positions that the institutions wanted to hold. Okay, because many times in the process of closing out old contracts and opening up new ones, they report the data during that process, and so therefore the information provided to us isn't very accurate. So we're going to take a look at the data that has been provided to us for December 24th, and we're going to see whether or not the institutions use the contract expiration to facilitate a big drop in position or a big increase in position. Okay, and we're going to take a look at a couple pairs where we're going to see a perfect example of them doing this. All right, so let's get down to it. We're taking a look here at gold, and so we were expecting this big move to the upside, and that's exactly what we got, a big move right into the area of supply. And so between December 18th and the 25th, we see a big increase in longs, but that doesn't really surprise us, right? Because for a big move like this to happen, we were expecting longs to get aggressive. And so that's exactly what took place. And so they've been closing off some of those shorts that they had all throughout this move to the downside, right? And now with the longs aggressive, what will most likely take place is we're going to see them starting to close off those longs and start accumulating a bigger short position. That's just my guess based on the technical analysis that I've done from previous positions and the supply and demand on the charts, but that's what I'm watching out for. Right now we've got more of a neutral sentiment right here, which is completely understandable. This is what would be expected after profit taking and the expected accumulation of a move for a push to the downside with big short positions. So that's completely acceptable, and if you take a look here, net positions jumped up, but again, this is normal behavior because of the move to the upside into the area of supply that we've been anticipating. Okay, so now let's take a look at oil. What do we see here? So finally they took out that weekly area of supply. Now the road to for a move upwards has been cleared. That was the only obstacle right here, and since they have removed it, it's opened up the road to the upside. Okay, now like if we take a look at the positions, okay, we know that they were going to be expecting to take profits on those long positions up here. And so we've seen a slight decline in those long positions. This past week's, or this December 24th's data doesn't show much of a move with the long positions, but we do see a slight increase with shorts. Okay, and so this comes as price was right down here at the bottom here, so that increase in shorts would make sense. Now what I want to be watching out for is the coming week's reports. I want to see if longs have been added, because that's what I'm assuming is most likely taking place here. Let's just close that. That is most likely what I'm assuming is going to take place here, is that they're going to start adding some longs, causing price to move up here, or this big push upwards could be a massive closure of short positions. Okay, that could be the case as well. But either way, I am expecting a move to the upside here, and then we will be looking to position ourselves. And once again, just like gold, if you take a look here, neutral is the sentiment. Why is that? Well, because the big move has already taken place. Okay, they were extremely bullish when they were pushing price upwards, but now they've hit an area where they're going to start taking some profits. And when they start to switch the sentiment, we have to shift from bullish into neutral before it gets into the bearish territory. Okay, so that's what I believe we are experiencing right now with oil. Now let's take a look at the US dollar. This one's been a little bit more difficult to read because technically it's in areas where it can move either up or down. and then we have the weekly zones that are trapping price. But when we take a look at the data, okay, we can see that they have declined with their long positions from 46,000 down to 43, and then the December 24th data down to 40. And with shorts this past week, or the past week's data, a slight increase in shorts. So the main thing that we're seeing here is a closure of longs, and that could be very much leading into a move to the downside like this, because we know that the ascending structure is broken on the weekly chart, and we know that an already tested weekly area of demand is now being tested one more time. So this could be more longs. Okay, there could be a theme here with more longs being closed out, opening up a path for a move to the downside. We don't know that for sure, so we'll have to see what other data comes out and what that tells us. Okay, so taking a look at the Aussie, we were expecting this move to the upside because of the imbalance that we were hitting, the demand imbalance that we were hitting. And so we saw a big increase in positions leading up to the contract expiration, and then now we're seeing that they just increased those longs even further, which makes sense, and we were expecting that, and that's why we saw a price move to the upside. Now when you take a look at shorts, a slight increase, but this is after some major profit taking on shorts. So this reaccumulation of a little bit more short could be in preparation for a larger move to the downside like this. Still too early to tell, because remember, this data here represents this consolidation candle here, and since that time there was the big spike to the downside and the move upwards. So we will need more data to get a little bit more accurate reading as to what the institutions are doing with their positions. Okay, so we go over to the US CAD, and this is really promising, okay, because we have price coming up into the monthly area of supply that's already been tested, and we are expecting this to get taken out, and we are expecting to see a bigger move to the upside. And leading into contract expiration, we saw a big increase in longs, and we didn't know if that was going to sustain or if there was going to be a discrepancy after the new data came out. Well, the new data is here, and lo and behold, they use contract expiration to increase their long exposure massively. Take a look at that, from 59,000 to 72,000. That's a massive increase, okay? And look what they did with their shorts. Massive decrease from 51,000 to 27. So you can see that the sentiment has gone from a neutral to very bullish. Okay, very bullish, and this helps support the very theme that we believe is in play right now, which is a push higher, an accumulation of long, and the removal of their own supply to cause this bigger move to the upside. So this is perfectly aligned with what we've been believing and anticipating for quite some time with the US CAD. So now let's move over to the US Swiss franc. So we got that drop in price, which is exactly what the analysis on the CFTC report and the historical data was telling us. So we saw that decline, okay, caused by profit taking. And so now price came down to the ascending trend line. We started accumulating a long position down there. And so you can see that long slightly decreased and shorts decreased, but the bigger percentage is for shorts, because if you take a look here, long exposure increased from 79% to 82%. So 82% long exposure, very bullish. It's aligned with what we're seeing with the US CAD, okay? And so we could start seeing a bigger accumulation for a push to the upside, just like that. All right, let's take a look at the euro. And what we see is a slight decline in longs and a slight decline in shorts. So again, we're not seeing much, but here is the takeaway. Take a look at what's going on with net positions. Increase from -13 to -58. So bigger accumulation of short positions. Okay, this could be in preparation for a move down like that. And that would make sense. I don't see that as something that can't take place, because if you take a look at the US CAD and the US Swiss franc, what are we seeing? A bigger accumulation, and we're seeing the evidence pointing that it wants to move to the upside. So if that takes place, that would lead to you to think that the dollar is going to get stronger, and if the dollar gets stronger, it's going to move up, and if that happens, we're likely going to see a move down like that. So it's possible that that's what is taking place. I still want to see the other week's data so that I can get a more concrete perspective on what is taking place here with the institutions and their positions. Okay, now let's take a look at the pound US dollar. What do we see? We see that they increased longs from 29 to 35,000. They also slightly increased shorts. Bottom line is the net effect being the longs have gone up from 25% exposure to 28%. But again, this was down here. But we can now see that that was in preparation for that larger move to the upside. Tested area of supply is now in contact. So anything can really happen. We can see this and a bigger push to the upside, but we'd like to see a bigger accumulation of longs, and that just might be what is taking place here. We know that they were taking profits on shorts, so that could have been in preparation for the bigger push to the upside. We'll wait and see with the other data that is expected to come out soon. Now the US dollar Japanese yen. So we had a massive spike, yet we don't have the data to show us exactly what took place here. What we can see is that longs were being increased, just like with the other dollar pairs, but a big increase in shorts as well. Okay, and that resulted in short exposure rallying up 3 points. And that took place before the big spike. Like I said, I am waiting for more data to come out because I'm really curious to see what caused this spike down. But the bottom line is we were expecting a move to the downside. We had predicted this based on reading the historical positions of the institutions. We were expecting this, and so therefore the spike that came in was in the exact same direction as what we were expecting the movement to be based on the institutional positions. Alright, so let's take a look now at the Kiwi. And if we look here, we see a slight decrease in longs and a slight increase in shorts. Bottom line is, since contract expirations, they put the sentiment into neutral territory. It was slightly bearish, now into neutral. That happens right before this push to the upside, so we could see this spill over and then a bigger move. Again, would like to see the rest of the data come out and see so we can see a more detailed picture of what is taking place here. Alright, ladies and gents, so that is the CFTC report for the data that was released December 24th. We're still getting more data. We're getting some more tomorrow and then on Friday. So we're going to get a really clear picture presented to us in the next couple weeks. Alright, so that's it for now. Hope you enjoy the rest of the week, and we'll talk to you soon. Take care.